Are live. So what is going on, everybody? Hope that you guys are good. Happy Veterans Day to all of our veterans out there. I want to thank you all for serving our country. So I know we've got several veterans from all branches of service in the Real Deal Video Strategist Club. So to my brothers and sisters in arms, love you guys. Happy Veterans Day. Thank you for doing what you do. So with that said, guys, today we are going to talk about taxes. Taxes, right? I was just talking to my CPA and I'm like, man, taxes they're kind of a pain, right? Especially when you got to send a big check to the IRS and you had no idea that you were going to have to send a big check. So today we've got Chris Middleton, who is a corporate tax strategist with us. And he is our preferred partner inside the Real Deal Video Strategist Club and the Video Strategist Collective. And he's going to talk to us today about some very, very important topics. We're going to start off with understanding kind of from a tax perspective, what you should form your business as. Should you be a sole proprietor? Should you be an LLC? Should you be an S Corp? Should you be something else? These are very, very important topics to understand. Otherwise, you could potentially be paying a lot more money in taxes than you should be. So again, this is for US-based members only. So I don't think that Chris can give any advice on anything in Europe or Australia or Canada or any other places that we've got people, but we can certainly talk about that for the majority of our members here in the US. So let me go ahead and introduce Chris. Chris, thanks so much for hopping on. Do you want to tell the club a little bit about yourself? We're streaming it to the Facebook groups and obviously we've got some people here as panelists, but why don't you go ahead and introduce yourself for the people that don't know you?
Yeah, hey, thank you again for letting me be here. And again, happy Veterans Day. I echo that. Chris Middleton, I'm based in Sacramento, California. Been doing taxes for 17 years. I'm like, wow, I'm getting old. So been doing taxes for US-based business for a while. And I'd say in the last 6 years, I've morphed into more of a strategist, meaning helping people be proactive about their situation and what they can do. I was a psychology major before I switched to accounting and decided I didn't want to deal with crazy people. No offense to anybody, not trying to, step on any toes, but now I deal with money. And money makes people crazy. So I'm right back to where I started.
I was going to say, if you don't like dealing with crazy people, you're in the wrong spot, especially if Jason JC's here, because he's the craziest one of all. So you came back to the wrong place. Well, that's cool. So Chris, we're going to get into the discussion. I guess what we can kind of do is just, maybe you could talk about the differences between those three, the sole proprietor, graduate to an LLC, and then potentially graduating to an S Corp, and what those even are.
Yeah. So sole proprietor, simplest form of business structure in the United States, right? It's the Schedule C, which I think stands for commercial, right? Commercial enterprise, your business. You don't have to register anywhere. You don't have to register with your state. You don't have to register with the Secretary of State. You don't even have to have a tax ID, like get a specific EIN. You can use your personal social. So a sole proprietor is the fastest, simplest, easiest way to start a business. Now, there are state and local registration, right, issues. People always ask me, they're like, hey, Chris, should I get a business license or, file a DBA or whatever? Those are state and local issues. The IRS doesn't care if you have a business license. They really don't care. They just are like, hey, are you earning money and are you paying taxes on it? So the sole proprietor is the quickest and easiest way to form and start a business. And fun fact, if you have a sole proprietor, well, a lot of people ask, like, when should I graduate or when should I make myself an LLC or a corp? What does that look like? What should I do there? So out the gate, I tell people, unless you have like a contract signed and you've got pipeline of work like jamming and you know you're going to turn a profit of more than 60 grand. If you're going to turn a profit of more than 60 grand for that calendar year, I generally tell people don't form an LLC out the gate. I say start as a sole proprietor, get your proof of concept, get your business, make sure it's a going concern that you know that you're going to be in jamming along in business. You've already got enough on your plate dealing with, and I think David, I tuned in a little bit the other day about your going from a W-2 to a, your own, and you said 6 month of bandwidth, right? Having living expenses and stuff. Super wide. Your fearful leader here is giving super advice. So that was really, I love that. At the end of the day, you got enough on your plate dealing with getting your business started, your logo, your branding, getting pipeline, customers through the door, to add the complexity of an LLC or a corporation. In my opinion, most of the time it just adds, I see some heads nodding, it adds a level of complexity that detracts you and distracts you from your mission, which is to turn a profit, feed your family, and make a living in this cold, hard world, right? So get yourself established as a business, jamming along, say, hey, I know I'm going to be sustainable. This is my sole focus in life, is as a professional, is to be the best video strategist out there. And then when you've hit that point where you're going to be profitable, and by profitable, I mean, I talk about your net. I love it when people are like, I made $1 million. I'm like, did you? I mean, you grossed $1 million, but you netted 40. So you didn't make $1 million because you had equipment and travel and everything. So you actually made, what is the net that you could live off of to pay your bills and pay your expenses. So that's the skinny on, sole proprietor and where you should be business level wise as a sole proprietor. Does that make sense?
It does. What are some of the, because there's obvious pros to being a sole proprietor. It's easy. You get to go in a day, you're up and running, you're doing business. What are some of the cons that we should be paying attention to from a sole proprietor? And everybody who hopped on into the Zoom room, can you guys make sure that your microphones are muted, please? Because we don't want to get the audio coming through. But what are some of the downsides to being a sole proprietor as opposed to an LLC? So
downsides of a sole proprietor versus an LLC or corp is, and Jason threw in there, should you get an EI or can you get an EIN as a sole proprietor? Yes, you can. So the downside is you're using your personal social instead of getting an EIN, or, as Jason asked, an employer identification number. So if somebody asks you, hey, you're doing business for a dentist, right? You're doing a commercial for a dentist or a resort or whatever it is, and they're going to be like, hey, your services are tax deductible, so we need to give you a W-9. You need to fill out and say, here's my name, my social, my address, and this is where they're going to send that 1099 at the beginning of the year. So you're going to be putting your social down if you don't get an EIN. Not a huge issue, I mean, because you're giving your information to a business or a professional, but that puts your social out there floating, that in places that you can't control. So at the end of the day, that's to me, that's a concern. You can, as a sole proprietor, you can get an EIN. You can go on the IRS website, there's an EIN. If you've ever had a business where you've had an EIN under your name or associated with your name in the past, you can't use their online tool. You have to go through a manual process, and it takes longer. So be aware, if you ran a daycare, or you ran a sales business, or you ran a whatever, and you had an EIN years ago, you're going to run into a stumbling block trying to get another EIN. You can have multiple EINs. I have clients that have a dozen EINs and all affiliated with their name. Totally doable. It's just you won't be able to quickly get one online.
Okay.
Questions on that?
From when you're a sole proprietor, from a tax standpoint, and you have to pay taxes at the end of the year, being that your social security number is essentially your EIN, what do you pay as far as taxes? Do you have to pay self-employment tax? How does that work from a tax perspective?
Yeah. So let's say you make 100 grand. You have $20,000 of expenses. So your net is $80,000. There's many types of taxes, right? We have income tax, and that's your 10, 12, 22%. You hear people talk about what tax bracket are you in? Well, everybody pays income tax. If you have income, you pay income tax. Everybody that lives in a state where, a place where they have sales tax, right? There's sales tax. Self-employment tax, or what you might know as Social Security and Medicare, that's what you pay as a sole proprietor. So let's say that somebody's making 80 grand, let's say they're single. Well, their income tax, that's gonna put them pretty solidly in the 12, maybe 22% bracket. So their income tax bill is probably going to be around, I think around 15 grand. That's their income tax.
So if they make 80,000 and they're in that bracket, they're looking at $12,000 to $15,000 in taxes, self-employment tax, income
not
tax.
Self-employment tax, just income tax.
Got it.
So now, I'm sorry, it's actually closer to about, because I'm doing the math for my example that I bring up, it's about 9 grand, almost 10 grand. So then on top of that, if you're a sole proprietor, meaning it's your company, you're the one paying the burden of the taxes, on top of your income tax, let's just call it 10 grand, you're going to have another about $12,000 of self-employment tax. And that's Social Security and Medicare. So if anybody's ever had a W-2 job, right? As you know, you see your W-2 come through, you get your pay stub and you're like, ugh, they took a lot of taxes. Well, they're taking out your income tax. That's your federal income tax withholding. And then they're taking out the Social Security and Medicare tax. But as a employee, as a W-2 employee, you're only seeing 1/2 of what's paid as a W-2 employee. Your employer pays a matching amount for Social Security and Medicare. So if you think it's bad as a W-2 employee, when you're self-employed and you're bearing the full weight of that 15.3% Social Security and Medicare tax, that can add up. So on a person that, again, they have net income, net profit from their business of 80 grand, they're going to be stuck with a tax bill of about $23,000.
Ouch, Chris, dang, man, that hurts.
It does.
That hurts a lot. That hurts a lot. I mean, that's a big percentage. We talk about making 6 figures, right? Let's get to a point where everybody can make 6 figures. That's kind of one of those milestone benchmarks. And I'll tell you what, the first time I made 6 figures as a self-employed person with a sole proprietor, and I looked at the tax bill, I was like, holy smokes, that is a lot of money that I'm paying in taxes. It was almost a third. Pretty dang close to it, if I remember right. Okay, so that is being a sole proprietor. Can you talk to us about the graduation from sole proprietor to LLC? Is there a difference in the amount of taxes that you pay? I think there's legal differences as well, which we can't really talk about because you're not a lawyer. I don't think you can talk too much about it. But are there tax differences between a sole proprietor and an LLC?
I'm writing down legal and putting a big circle around it. Like I said, I'm not an attorney and I don't play one on Zoom or TV. That's my joke. But I can speak to some things and then say, here's the questions you want to ask an attorney. So we'll put a pin in the legal side. So what I said earlier, when your net profit is about 60 grand, right? When that net profit's about 60 grand, that's the tipping point where you want to say, ooh, should I start to think about, or should I consider creating a corporation? There's a reason for that. So fun fact, and my business partner, he's like, Chris, your facts aren't always very fun. I'm like, whatever. I think they're fun. So there is no such thing as an S corporation legally. As an S corp, you are a LLC or you are a C corporation. Those are your paths for the legal formation. And whether you should form an LLC or a C corporation and then make the election to be taxed as an S corporation, that depends on your state of residence. I can tell you in California, where I'm based, there are certain industries that are not allowed to be an LLC. They have to be a C corporation, and they have to make the S election to be a C corp. So my advice would be check with an attorney who knows your state laws and who can tell you, oh, your industry, your niche, you're allowed to be an LLC, or you can only be a C corp. So that's your starting point. To address the issue of, is there a difference in taxation between a sole proprietor and an LLC? They're taxed the same. An LLC, you still incur those self-employment taxes, right? So if you're just an LLC, you still incur the taxes. Now I'm going to make a point here. Earlier, I said it generally doesn't make sense to be an LLC or make a corporation until you kind of hit that mark of 60 grand. If you live in a state, I think, David, you're in Texas.
Correct.
Right? So if you live in Texas or Wyoming or Florida, it's super cheap to form a corporation. It's super cheap to form an LLC. If you live in the great state of California, it's like if you form a corporation, you owe California $800 a year, whether you make money, lose money, or do nothing. They take 800 pounds of flesh from you every year. So if you live in Wyoming, it's like $30 or $40 a year. If you live in Florida, it's like not much. I hear $40 in Kentucky, $500 in Massachusetts. Thank you, Jason. I didn't know that. So Massachusetts, California, I would say 500 bones. That's a lot of cheddar, especially if you're trying to start out and you're scraping to, get by. I would say don't form a corporation in Massachusetts. Don't form an LLC or in California until you're a going concern. If you're in Kentucky, form if it's allowed, which I think it is in Kentucky, form a single member LLC and get your EIN. And then, there's no difference between the taxation of the sole proprietor and an LLC. So you're in the same boat. So it depends on your state, but when you get that tipping point of $60-ish thousand net, that's when it makes sense to say, hey, LLC or C corp, and make the S election. And here's why. Remember, we talked about that $100,000 minus the $20,000 in expenses. So you're left with an $80,000 net. Well, if you're taxed as an S corporation, that $12,000 Social Security and Medicare tax disappears, because the net profit on your S corporation is not subject to Social Security and Medicare tax. So everybody's like, well, shoot, I'm going to form a LLC or a C corp and make the S election. Boom. There we go. Why don't I start doing that at like 10 grand, 20 grand, Chris? Why don't I make that switch earlier? Here's why. I jokingly call the Social Security system the world's biggest Ponzi scheme. They need yours and my dollars to put into to feed the pot, right? To feed the people that are currently recipients of the Social Security and Medicare system. They need incoming tax dollars to pay for that. So if the IRS says, well, wait a second, we just allowed S corporations to not pay Social Security and Medicare tax on that net profit of the corp, we just lost a ton of Social Security and Medicare revenue. So there is a requirement, a legislative requirement that requires you, if you are an S corporation owner, to pay yourself a reasonable salary. So that's why I tell people at the $60,000 mark of net profit, that's when you've kind of reached that tipping point to be able to afford to pay yourself a W-2 wage. If you make yourself an S corporation before that point, sure, you might be saving a bundle on the Social Security and Medicare, but the IRS could come in and they're on the hunt for this. They're starting to look at this more recently. They could come in and say, hey, you're an S corp. We don't care that you only made 10 grand. You need to pay yourself a reasonable W-2 wage. Got a question? Can you give examples or go into what is a reasonable salary? Yes, I will. I'll hit on that. So well, I'll talk about that now. So, hey, you made 10 grand. Sweet. You only made 10 grand net because you bought a crap ton of camera equipment. You invested in a marketing, website. You invested in, branding stuff. So you had a lot of startup expenses. So that first year, your net profit is probably going to be minimal because you have a lot of write-offs that you were able to take. So the IRS would say, well, that's fantastic. But you had X number of projects, and how long did it take you to complete those projects? Oh, it took you 300 hours. Well, if you paid somebody $30 an hour, $20 an hour, whatever that is, to perform the video work and to perform the editing work and all that, what would that cost you, Chris, to go hire somebody to do that? That's what they would say, here's your reasonable salary. You're the one that did all that? Chris, you did all that video work? You're a chief cook and bottle washer? Well, based on that 300 hours, I can't do math in my head, so I'm just going to pull out my trusty calculator, right? 300 hours times $20, that's 6 grand. So you only made net profit of 10 grand. Well, 6,000 of that should have been at $20 an hour, which I don't know if that's reasonable or not. It depends on your area, it depends on the tasks, right? But over 60% of my net profit is supposed to be paid as a W-2 wage. And then you need to hire a payroll service. So they can come in and say, you're not compliant. You're an S corp. You look like an S corp. You talk like an S corp, but you don't walk like an S corp because you're not following the rules and paying yourself a W-2 wage. So then they say, you're not a corporation. We're going to bust you back down to a sole proprietor or a C corporation, and now you have to pay the full taxes on everything. Was that clear?
It does. And let me give you guys a practical example, because I moved both of my businesses from LLC to S Corp, or the S Corp election, I should say. And when I did this, and the advice that I got from my tax professional was, listen, we'll be able to save you a lot of money. And Jomi, if you could do me a favor. Oh, I got you muted, Jomi. I had to mute your microphone because I was hearing you. You're cool. Good to see you here, brother. Okay, so when I moved both of my businesses over to an S Corp election, the advice was you need to make sure that you are going to be able to sustain the amount of business that you're currently doing year after year after year. Because if you don't, if you're super profitable this year, but you take a loss next year, you are still required to pay yourself a salary. Right. And there's a what do they call it? Like a case study almost. Like I had to fill out a bunch of stuff to figure out like what my job title would be for a reasonable salary. Right. Mm-hmm. So I did this job study. We filled everything out. You put it all in. Right. And this thing pops out and says, okay, based on what you're saying you do, you're required to pay yourself a salary of 50,000, 60,000, 100,000, 200,000, whatever it is. So I am required to do that even if my business is not profitable. Now, both of my businesses are profitable, so I do pay myself that salary, and I get the big tax deduction based off, not deduction, but I don't have to pay that what'd you call it, income self-employment tax.
Medicare, self-employment tax. Yep.
That. So point being is, if you get to a point where you know that you're going to be profitable and you can pay yourself that salary, then there is benefits to doing that. Am I explaining that correctly, Chris? Did that?
Yeah, I think you echoed. And in the audience, anybody, any thoughts or feedback on questions? Is that raise a hand? Does that make sense, or is that fuzzy to anybody? I see some heads kind of nodding, so it looks like we're making sense. So the what you're saying is, to recap, the net profit of the corp is not subject to Social Security and Medicare tax, this FICA payroll taxes, right? So people are like, well, sweet. But the IRS says, hey, you need to pay yourself a reasonable salary. So people are like, well, I'm going to pay myself $100 a month. $100 a month is not reasonable to say, what is your role in the company? Now, David, you did that compensation study. I have a tool. I just renewed it. And, I have a tool that I send out to people and say, here, fill out, tell me what you do. What percentage of your time is allocated between high value and low value tasks, right? I would argue high value task is doing the planning work, right? What are you going to do for the shoot, the engagement? How are you going to, helping the client understand, hey, how is this going to be used in your business, right? What are the segments? Doing the strategy piece that you're road mapping out, that takes a vision that takes vision and thought and talent. Low value is, I don't know, like setting up and taking down equipment, right? I mean, you train me, guys. You don't want me behind the camera. I don't know how to do that stuff, but hey, transport the stuff and set it up and here, Chris, get it. And then the pros move it back and forth and get it where you need it to be. But that would be a lower value task, right? And then the editing, right? The editing, that's going to be higher value, layering music and light effects and blah, 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 tinting. Like, you guys are artists. What you do is amazing and I can't do it. So I know my lighting sucks right now. You're all like, hey, you need to fix your lighting, right? But that's higher value tasks. So if you can dissect what you do, and I would argue wherever you are, whether you're at the sole proprietor growing your business or now, take time. Here's a pro tip: take some time and figure out, where do you spend time during the week? Where on an average month or on a busy time of year or a slower time of year, where do you spend your time doing what, right? And look to allocate your time, because if you have that and you come to somebody like me and you're like, hey, Chris, here's where I spend my time, I can be like, oh, sweet. Well, let's do a compensation study. And you're already there as far as helping us determine where's your time being allocated and what is a reasonable salary. Because the goal is to pay as little as possible, because you want to reduce your Social Security and Medicare taxes. You want to pay less in payroll taxes. I would argue that you can do better things with your money than the government can. So there is value. I mean, there is value. I tell people, they had a guy who he paid himself like $6,000 a year. He was way underpaying himself. I have an attorney who was paying himself like $30,000 a year. And I'm like, bro, can you hire an attorney to work for you for $30,000 a year? And he laughed. He's like, no. I'm like, so well, who could you hire? Could you hire a front desk person? He's like, no. I'm like, yeah, you're way underpaying yourself. So the benefits of doing it the right way, paying yourself the right way is, God forbid something happened and you need to claim Social Security disability. You want to have enough wage base there that you would be able to collect something, that safety net. If you died, and not wishing this on anybody, but I have a guy who, he passed away. His wife went to go claim Social Security survivor benefits for her and her 4 kids. And they got like $40 a month because he was not paying himself, or he's working under the table and he wasn't declaring his income. So taxes suck. There are things that taxes are used for that can be a benefit to us, and paying yourself an appropriate wage will only help you as well with, qualifying for loans for a house or, equipment or whatever. So there's a balancing act there, but at the end of the day, it's important to really jam.
Okay. I got one more question, and then we're going to start going to the questions in the Zoom room here.
Yeah.
Okay. So when we do what did you call it? The study where you calculate how much your reasonable salary is?
Compensation study. Yep.
Compensation study. Okay. So you do your compensation study, and the compensation study says, okay, dude, you need to pay yourself $55,000, right? That's the lowest level that you can pay, and the IRS is going to say, okay, that's reasonable. That's good. Okay, so 55,000. If we can do 50,000, great. 45, cool. Like whatever the lowest is, because that reduces our tax liability. But it says, okay, you got to pay yourself $50,000, and you're thinking, okay, well, I'm $50,000, but I'm netting 110. Do I have to live on 50? Is that all I get? What in that situation, if I want to live past 55,000 because I'm making, excuse me, that much money, how can I do that?
Yep. So let's take the 100,000. Great question. Somebody asked this earlier. So thank you for looping that back. So say you make 100 grand, you have 20 in expenses. So you have an $80,000 nut. That's your net income. So let's say you pay yourself 40. I'm just hypothetically, let's say it's half and half. Well, let's say it's 50,000. 50,000 is that W-2 comp. So you're taking 50,000 out in W-2 wage. And let's say there's about 30 left. As a flow through, as a pass through entity, and as an S corp, your tax on that 50,000 plus the 30,000, your tax on that 80 grand, whether you leave it in the company or whether you pull it out. And that $30,000 net profit that's yours, that's your money. Whether you leave it in there or pull it out. So my advice is drain the bank account, drain the account, do the distributions. Those are called owner draws or distributions or shareholder distributions. That is your profit to take out. Now, some people are like, hey, I'm going to leave the money in there because I've got a big expenditure coming up, or I got bills to pay, I got contractors to pay, and I'm waiting to get paid. There's that float in the business, the cash flow float where you got to kind of, hey, I got to leave money there. But at the end of the day, if you leave money there or pull it out, it's still your net profit. Whether you drew it out or not, you're still taxed on that net profit.
Perfect. Okay. So you can just write yourself a check, draw, good to go, right? That way you can live beyond that $50,000 that you're required to pay yourself. Okay, guys. So benefits from sole proprietor, LLC, S Corp is that the sole proprietor and the LLC fairly easy to set up depending on the state that you're in. For the LLC, it could be super expensive, so you may or may not want to do that. There's legal things that go with that, right? So talk to a tax attorney about that. And it's very important to understand sole proprietor, LLC, guys. I'm gonna tell you, I learned the hard way when I launched my very first business, because I was not understanding of that. And I ended up having to file a bankruptcy, like legitimate bankruptcy. Not my business, me had to file bankruptcy. This was a long time ago. So thank God it's already off the, whatever. But talk to your tax attorney to understand where your liability lies from a legal perspective. Okay, because the sole proprietor and the LLC are going to be taxed the same. If you get to a point where you're like, crushing, right? You got a business that's running, rock and rolling, and you're running a profit every year and you want to save some money, ask your tax professional, hey, can I switch to an S Corp, right? Because I'm making enough money to pay myself a reasonable salary and reduce my tax liability because I don't have to pay that extra chunk. I will tell you guys, I have saved tens of thousands of dollars when I got to that point, right? So that's a point that you guys got to discuss with your tax professionals. And with that said, let's move into some questions. This is the big thing, Chris. Okay, I'm a sole proprietor. I'm an LLC. I am not ready to go to S Corp, but man, they're crushing me with these taxes. What the heck can I write off? Where are the deductions that I can take, right? Let's talk about that. I know that's kind of the big question. So I'm going to open it up to the floor. Okay, so if you're actually a panelist and I can see you in the Zoom room, let's use the little hand raise emoji and I'll call you out. And you can ask questions about write-offs. You can ask other, Chris, I saw you had a question about 2 states and stuff like that. So if you have a question, raise your hand. But I do want to try to focus on what can I write it off, right? Are my haircuts a write-off because I'm always on camera? Is my equipment a write-off? Is my mileage a write-off? Are my meals a write-off? Let's talk about that. That way
let me set the table for that if I can. As people are raise hands and pitch it out. So for a tax deduction for something to be tax deductible, you have to have 2 elements. So one, is it 100% directly related to your business? Right? I just I don't know what the cable's called. I'm setting up at my new house that I moved into. I'm setting up my home recording studio because I'm doing some stuff, and I just ordered a cable. It's an XLR cable. I don't know. XLR, is that a thing? Yeah, sure. Okay.
That's good. You got the thumbs up from the video people.
This is not my jam, guys. What you do is an art. I totally respect what you do. It's an art. So yeah, ordered my yellow XLR cable, which I'm all excited about, and got it yellow so I could spot it in the dark and figure out where I need to plug it in. Right? Okay, cool. Saw that piece, Chris. There you go. So the XLR cable, that's 100% 100% related to my business. If I didn't have my business, if I wasn't doing this, if I didn't do this, I'm not recording TikTok style videos for fun. I'm doing it for my business. Cool. So that's element 1. Is it 100% related to your business? Element 2, is it reasonable and necessary? Is it a reasonable or an ordinary and necessary expense, right? So is it common in your industry? So let's take the haircuts, right? So David's like, hey, are my haircuts, are those deductible, right? You keep it trim, you keep it sharp. There's other people who like to have longer hair. They look hippy dippy. And then there's other people that don't need a haircut because we're not blessed to have hair. Okay. So at the end of the day, the answer for the haircut is that's not an ordinary and necessary expense broadly for everybody, right? So the IRS says, hey, haircuts and maintenance are not, that's not deductible. Now, makeup, the cost of makeup, if you're doing makeup and stuff to get on the camera or you're on the camera, makeup's a deduction, right? Or investing in lighting to make yourself look better. But, whether or not you have long hair, short hair, no hair, right? Haircut is not deductible. Okay. Clothing, right? I'm wearing my Cubs, Joe Madden, try not to suck, t-shirt, right? And I'm a baseball fan. I know the Yankees suck this year, so whatever.
Hey, we're about to kick you out now. The show's over, guys.
All right, see you guys. Hey, look, Cubs didn't make it either. So, at the end of the day, this t-shirt, as cool as it is, right, is not tax deductible, because if I wear this to the grocery store, or if I show up on camera and I'm wearing this, people aren't going to look at that and be like, oh, Chris, you're a tax professional. I do have a shirt that's got branding on it, that has Tax Reduction University logo. It's got a slogan. It's got my stuff on the back, right? So if I walk up to somebody in the store and I'm asking them, hey, where's the ketchup? And they'll be like, oh, you do taxes? That's when clothing is deductible, when it's branded. It's got your information on it and it's branded. But your dry cleaning for your suit or your dry cleaning or your laundry expense, that's not a deductible unless it's dry cleaning for your branded uniform. Okay. So you have to ask the question. That would work. Yeah. The cost of producing that, or if you bought the shirt, like I have t-shirts that I bought at Target, $6 for, Target t-shirt. They're nice. And I paid like $6 or $7 per shirt to get a logo on. So ended up being really inexpensive quality shirts. So the shirt and the logo and the branding of that are all deductible because that's a uniform. So 100% directly related to your business. And is it an ordinary and necessary expense that's uniformly applied to everybody in the industry? Those are kind of your guidelines for, is it deductible?
All right. Guys, I've asked a ton of questions. So if you are in the Zoom panelists, and I can actually see your faces, camera's on because I like seeing your pretty faces, raise your hand. We'll ask Chris. If you are in as an attendee and you're in the webinar room and I cannot see you, you can go ahead and put your question in the chat and we will get to it. Jason, looks like you've got the first question. What you got, brother?
Well, I already know this answer, but I just wanted Chris to help everybody else out. A lot of us work from home, do our edits at home, stuff like that. Can you break down the two different ways of writing off those costs, like electricity, utilities, and kind of break down the two different methods of doing that?
Okay, so I think you're referring, great question, and I've appreciated your questions so far, man. So I think your two methods are the percentage of business use or the kind of the newer standard deduction for the home office. Is that okay? Got it. Yeah. So let's say, okay, I'm in my living room, right? That's where I have my Zoom, and then because I'm keeping the bedroom that I'm turning into a recording studio as a recording studio. So this little corner right here, 12 square feet, is actually would not qualify because it's not a dedicated space. There's not a door. I can't close it. So this would be, I'm in a mixed use space right now. That's not 100% business use. So this little area, I couldn't, unless I put up a little divider to create a closed space. So you have to measure the area of your home that's dedicated business use. And then you have to take the total square footage of your home and say, okay, what percentage? So if you have 100 square feet, 1,000 square foot home, just keep the math simple. You have 10% of your home that's home office dedicated. So now you can take 10% of your utility bills, 10% of your, I would argue your internet, you would be more aggressive because you're uploading and downloading videos and stuff, right? So if you have to upgrade to a higher internet percentage, that's our internet speed. I would argue you can take more there. But, if you rent your place, you can take 10% of your rent. If you own, you can take 10% of not your mortgage payment, but the interest you pay and the property taxes you pay. Those types of things. And the other method is there's a standard deduction. I think it's $150 per square foot up to, I forget the total square footage, but it's like 100 square feet. So I think it's 150 at 100 square feet for I want to say $1,500 standard deduction, right?
Sweet.
So if you take the home office deduction as a percentage of use, then there's some depreciation recapture issues that you could potentially deal with. Or if you take the standard deduction method, there's no depreciation recapture, but good question. So really good question. I would say tax savings start with, and this is not the sexy answer, I'm sorry, but tax savings start with record keeping and knowing your numbers. And if you haven't measured out your space, if you haven't done that, do so you can have that documented and know your numbers.
Absolutely. Good question, Jay. Yeah, a lot of us work from home, so that's important. Make sure that you're not overpaying. Also, if you guys were not on the last strategy session that Chris did with us, he gave us an awesome strategy called the Augusta strategy, right? where you can essentially rent out your home to the business for up to 14 days per year at a reasonable rate and take a pretty big tax credit, not deduction. Am I correct there? And I don't want to get too much into that.
It's a tax deduction. It's not a tax credit. So yeah.
Okay. Cool. So if you guys didn't see that, you can go watch it. I uploaded it into the VSC app. You guys can go check that out. But there's that. So good stuff. Okay, let's go over to Chris. Chris, what's your question, brother?
Hey guys. Okay, so I've got a few. So I did an EIN for my business, but I registered for an EIN, but I haven't created or registered with the state yet. I'm in Texas, and so I'm wondering if I was preparing to do an LLC, and that's what I registered the EIN for. But if it might not need to be an LLC yet, do I have to stick with it? Do I have to like go for an LLC even if I already because I did that with the EIN?
So if I'm understanding right, you got the EIN, you haven't actually filed the paperwork with the Secretary of State to say, hey, use this EIN for this legal structure. And again, I'm not an attorney, nor do I play one on TV or Zoom, as I say. But at the end of the day, the Secretary of State, you have a clear understanding that the Secretary of State is the one that acknowledges, and that's when you have your paperwork filed with the legal Secretary of State, that's when you are legally recognized as an actual LLC. You're in Texas, so I would say an LLC would make sense because it's cheap to operate there. So yeah, broadly speaking, I would say, yeah, finish that out and get that sucker on the books to have that done. I have guys, I have a phenomenal attorney in my network. Yeah, can I, David?
Hook us up. Yeah, hook us up. Oh yeah, we're always looking for good attorneys.
He's super bomb. So he is probably 20 to maybe 30% more expensive than LegalZoom, and about a third of the cost of local attorneys that I've found. So he tends to come in between, $700 to $1,200, kind of in that range. But with his legal structure, he does some verification with you. He asks you get the benefit of a live attorney to ask questions, and then he gives you, as part of the formation package, he gives you a full year of corporate compliance, which LegalZoom charges like an extra $300 to $400 for. So they nickel and dime you, and your DIY, you may or may not do it right. He takes care of his people. He's the only guy that I've referred to for like 8 years. He is,
Sweet.
and there's a reason for that. He's just really good. So before we leave here, I can drop his calendar link in the chat. You can book a time with him and just say, hey, Chris Middleton, blame me, say Chris Middleton sent me, and he's super good. So I'm going to drop that right now. That's his calendar.
Yeah, please do.
His name's Scott Burnett. He doesn't charge for a half hour of his time to chat, and he's super to the point and super good.
Sweet.
So.
Okay. Chris, hope that helps. Chris, if you have multiple questions, I want to get through all the questions. So I'm gonna come back to you at the end if you still have questions. All right. So I want to get through everybody. See who's up next. Jomi, what was your question, Jomi? And we're kind of coming to the top of the hour. I think we can go a little bit past the top of the hour, but let's keep it short. That way everybody can get to their.
Yeah. Hey, Chris, how are you?
Good, man.
Good to see you. Thanks for this session. I am someone who actually wait till the end to do my taxes. So I'm not proud of that, And I registered my LLC recently.
Say again.
I registered my LLC in June of this year.
And what state are you in?
I'm in Iowa.
Iowa. Okay.
Yep. Are you in Texas or?
California.
Oh, awesome. Yeah, I would love to move to California, man, but everything is kind of crazy over there. But I was just wondering, Chris, like, how do I reach out to an accountant to get like consultation on tax strategies throughout the year, and not just for like when it comes to doing the taxes? You know what I mean? Like, I was just wondering, like, is it like a monthly thing or like a quarterly thing? Like, just wondering how that like kind of look like, I guess.
Great question. So finding, I just did a consultation, chatted with a guy for about a half hour the other day, and I talked through his needs, figured out what he needed, and where I was like, okay, do I belong in his life, in your life? And I was like, yeah, I do. Here's where you're at, and this is where your needs are. And he was like, okay. Told him what I charge, and he's like, oh, that's more than I've talked to other people. And I said, to be fair, I don't know anybody that does what I do the way I do it. I'm actively, because I'm recruiting tax professionals to operate by my playbook. It's difficult to find. I call tax people, happy historians. Most tax professionals are just taking your numbers, putting them in the right boxes, and that's not easy work. The laws change all the time, and it's compliance work is not easy, but it's difficult to find somebody that wants to move beyond recording history and be proactive. So the answer is, just be proactive, reach out to people, and if you can understand, like, hey, and this is what I ask when I interview other accountants. I say, hey, what is the relationship? What does that look like with your clients? Can you just define for me your customer journey, your client journey? What is their experience like? If an accountant's coming to the table with, hey, here's how I've designed my services to create an experience for my client. Now you're looking at somebody like you guys do, you're taking people through an experience, right? You're taking people through the strategy, soup to nuts. Here's what you're doing. There's not a lot of accountants that do that. So to answer your question, I'd be happy to chat. I'm going to put my calendar link in the chat as well, and let's chat for a half hour and see, if we're a good fit. And if not, is that okay that I say this, David? Sorry.
Go for it. Heck yeah.
So, my calendar link is calendly.com/cut my tax bill. I'll chat with anybody for half hour, 45 minutes and be like, hey, can I help you? If I can, here's what it looks like to work together. If I can't, let me see if I can find somebody. If we're not a good fit, let me see if I can find somebody to connect you with.
Jomi, this is why we bring these people in, our strategic partners and our preferred partners, right? We want you guys to have access to people that are going to be able to help you out with this type of stuff. So Chris can work. He's going to help me out with my stuff, right? I'm in Texas, he's in California, you're in Iowa. So long as Chris can help you out, that's why we've brought him in, so that you can reach out to him and be taken care of. That's why we have this in the Video Strategist Collective, right? Along with our other strategic partners who we got the marketing people, we got the SEO people, we got the networking people, we've got the financial planners. All of those people are accessible to you, Jomi. So reach out to Chris. He'll be able to talk to you about your stuff. Cool.
I'd say let's talk, and how can I, if I can help, again, great. If it's not a good fit right now, then we part as friends, and I say, let me see what I can do to put you with some resources that can help you. My mission is to save 1 million business owners 30 to 50% on their tax bill over the next decade. That's my mission. That's what gets me up in the morning. And I'm like, let's go, because you can do better things with your money than the government can.
Speaking of which, okay, and Clinton, I see that you have a question, but I want Jomi, got your question answered? Awesome, thank you. So Chris is on a mission to help a million business owners, right? So I want to give him the opportunity to plug the program that he's put together to help you with your tax savings, tax strategy, and all that kind of stuff. He sells a program that you guys can purchase. And let me lead with this question so that you can run into it, Chris, and tell us more about your program. But our educational programs, for the purpose of making you a better business owner or for your business, are those tax deductible? And can you tell us a little bit about your program?
Yeah, so I like the Alex Ramosi, if you know who he is, you know, the S and Me 500. So if you're investing in yourself, if you're investing in coaching and things that are going to benefit your business, and you can say, hey, that's a directly related to my business. I had a client reach out to me. He's all, hey, can I deduct this like yoga shaman retreat that, you know, homeboy's a realtor. I'm like, okay, I love you, man. Greg, you're awesome, but yoga shaman retreat, I don't see how that's directly connected to being a better realtor, like other than, you know, you're zen with your client. I don't know, but I was like, that would be a stretch, right? But if you're, you know, investing in stuff to help you be a better marketer, a better presenter, a better, you know, sharpen your skills, help you on your business, tax savings, those types of things are tax deductible. So yes, I forgot I woke up today with a little bit of a cold, so I'm like a little bit of a zombie today, but I don't remember the link off the top of my head. David, I will get that to you for your program. You guys, David has graciously, instead of an affiliate fee, he just said, hey, pass any affiliate stuff to my tribe. I want to take care of my people. So he's like, I'm going to waive that and just give that to my people for savings. So I think that was like a 30% discount off of my fee. And I have a tax reduction university. It's a self-help DIY program that gives you self-paced learning tax strategies. We break down, I have a whole module, 2 or 3 actually, on legal structures and what, you know, the differences are in there. There's a whole bunch of stuff. So taxreductionuniversity.com. You can go to taxreductionuniversity.com/tax tips. That's a weekly newsletter, Tax Tip Tuesday, where you can get tax savings tips. That, again, that's part of the mission, is helping people. And with that, TikTok style videos are going to be coming out soon that echo that. But yeah, jump on my calendar. Let's chat. Calendly.com/cut my tax bill. Let's just help. And I can say, hey, you're at a place where you need the self-help, you need the group coaching model that I'm launching, or you need one-to-one. Let's meet you where you're at. That's my goal.
Awesome. Okay. To reiterate, you can write off that course. If you purchase it, you pay less in taxes, and Chris is going to teach you how to save more money on your taxes. Guys, like legit, that's win, 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 like all the way around. He offered me a 30%.
It's a win-win lose. You win. Your clients win because you're more profitable, and the IRS loses.
Tell them, send them back. Get out of here with that. And yeah, 30% off. He offered me a 30% affiliate, and I was like, nah, I don't need that. Just give the savings to the club and to the VSC and to the real deal. So if you guys are watching on the live stream or you're watching the recording of this and you want that, 30% off of it, and we'll get you the link for that. Also, the Real Deal Video Strategist Club is 60% off. Just saying, 60% off if you're watching this. And I think it's pretty dang smart to reduce your taxes and learn how to be a better business owner all the way around. Makes sense. Okay. Clinton, what's your question?
Yeah, so I have a friend, she did the Mary Kay thing, right? And she was kind of giving me some advice this year. And she had mentioned, I don't know if this is true. So I figured before I go do taxes, I talk to a professional. And she said, anytime a client, so you got your home office, anytime your clients use that part of your house, you can deduct that. So the scenario, my home office is in the basement, meaning my clients have to go through the front door, through my dining room, down the stairwell, and then into my, and all this space that they touch, that you can deduct that. Is that an actual true? Is that like gray area, or is that like, nah, she got misinformed somewhere?
No, so I actually agree, because you can actually take, that's rite of passage kind of easement concept, right? You can't get there without going through here. And so that totally makes sense. I would include that as part of your space for measuring of what's business use. Same thing with a bathroom, right? Use a bathroom.
Okay.
Because hey, again, it's your, if they're there and they're in your home and they need to use the bathroom, include bathroom. So if you only have one bathroom in your house, like me, I'm in a 3-bedroom, 1-bath. I mean, the bathroom's included in that square footage to help bump up your space.
Okay. Now to tag along with that, I just converted it's a garage slash studio now, to do film shoots. Can I now deduct the driveway when they park, if they park their
would.
car in my
So
driveway?
yeah, so I said I would, but hold on. Is the driveway included in the square footage of the house? I don't believe so.
No, it is
If
not,
you,
because it's not considered finished
it's not
in the
considered
floor plan.
livable space, right?
Yeah.
So I hear what you're saying, but I was like, oh, wait a second. If you try to say, okay, we have X percentage of, and you include the driveway space, now the IRS is like, well, where'd you get that? Because it's not considered part of the structure. So I hear you. Pigs get fat, hogs get slaughtered is what I always say. So you have to be conscientious of, making sure that,
Clinton,
So
I love you, man, because you just saved me some money and I didn't even know it, bro. That's why I'm loving this. Good
so
stuff. Okay.
in my home office use in Tax Reduction University, I actually, that's you got a really savvy friend and she understood that, but that I addressed that in the Tax Reduction University.
So, okay, let me make sure I get it right. So let's say, for instance, the client comes through the home, the easement, up the stairs, blah, 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 bathroom, all that stuff. Like, is there a certain percentage of time that you have to have clients in your home in order to do that? Or if they just come into your house once and you do it once, you can deduct that along with the rest of everything?
It's a case by case. I mean, because how often do you have people in your home? Is it constant traffic? I mean, is it once a year? Yeah, we don't have time to unpack that necessarily. My argument is be reasonable, be realistic, and be honest, right? If you have people constantly or consistently, if you have an assistant, somebody, or subcontractors, or you're collaborating with people, it doesn't have to be a client. It could be a collaborative business partner, right? So, I mean, are there people there that are using your space for legitimate bona fide business? I love that word, bona fide business usage, right? So you have to be conscientious of what that looks like and what that is. So it's been real, it's been fun, and yes, it's been real fun. I do have to jam because I do have a place I got to drive to and get to, but any other questions, ping me. I'm here to serve. I love helping people. I talked to a guy. He was like, Chris, I've been looking for somebody for 2 months, and he saw my stuff on Instagram that I was kind of haphazardly posting. And he's like, dude, like, in the first session with him, he was just like, you've answered so many of my questions. And I'm passionate about helping people, because you work hard for your money and the government is aggressive in taking it, and you and I can do better things. And guys, friends don't let friends overpay the government. I'm going to tell you, if your Mary Kay friend, I'm going to tell you, if you have a friend that is overpaying in taxes, I'll extend the Video Strategist Collective offer to anybody that you share that link with. I'm just going to say, anybody you share the link with, you need to let people know, like, hey, this is through my homeboy David. Give David some publicity. You're broadcast what you do. I'm part of this. You should check this out, because this is something that is valuable. And again, my mission is to save people real money without the fear of audit or jail time.
I love it. Okay, here's what I want to do, guys, because Chris has got to go. Can everybody do me a favor? If this was super helpful, come off of mute and let's give Chris a round of applause and thank him for showing up and helping us out today. I appreciate it, Chris.
Do the sign language.
Okay, second thing, everybody take a picture of your screen real quick, right? Let's do some social media posts. Break out your camera. take a picture. There's Jason, I see. Okay. Do me a favor. Go post this somewhere, go share this, and let everybody know that you just had an awesome tax strategy session, regardless if they're videographers, preferably if they're videographers, and let them know if they want the recording of this, to reach out to me, reach out to you, get in contact so I can get them the recording. And if they want that same discount, the 30% off of Chris's course, Chris, we're able to do that?
Yep, absolutely.
Okay,
100%.
excellent.
Yep.
Chris Stewart, I think you might be on. Let me mute you. Okay, share this, guys. Let's help people out. Taxes are a pain in the butt. Let's make sure that we're squared away. And if you guys want that course, again, it's tax deductible and you learn how to save more money on taxes. Chris, I appreciate your time. Thank you so much. We'll see you back maybe in the first quarter. Happy holidays to you and everybody. Thanks for showing up, and we'll see you on the next one. Okay, guys.
And David, your daughter, not all babies are cute. She's super cute.
Man, we went long, so I got to run downstairs and give my baby girl a kiss. Thanks, Chris. I appreciate it.
Bye, guys.
Okay, guys. Have a good one. Thanks, everybody.